Finance professionals come into the picture after everything is over. They do a post-mortem and tell you whether the organization has made a profit or a loss. Finance management is happening 24/7 in every action of every individual in your organization.
Awesome. Everybody, please write it up. Mr. Lamba, I'll give you a quick introduction. Mr. Anil Lamba has been a number one figure in the Indian personal finance space for a very long time. अभी तो webinars और online courses और किताबें अभी लिखी गई हैं. But Mr. Lamba has been dominating this industry for the last 30 plus years. और जब मेरी इनसे पहली बार बात हुई फोन के ऊपर, I think जब COVID start हुआ था, and I told him that there are many things that you can do with online webinars and courses. और उस टाइम जो उन्होंने मुझे अपने numbers बताए थे, they were already way ahead of their times. So आज हम उनसे जानेंगे many things about family, finance, entrepreneurship, but also कि कैसे है कि वो 5 साल हमेशा दूसरों से आगे एक कदम रहते हैं. So Mr. Lamba, welcome to the Internet Moguls World School.
Thank you, Avi. Pleasure to be here. A slight correction to the introduction, guys. Even though personal finance, etc., all falls into our ambit, but my main area is business finance. We train companies and corporations and businesses on how to handle finance better. So that is what I'm going to speak to you about even today, because I believe all of you are entrepreneurs. In any case, that will be a more appropriate topic for you guys. So folks, time is very, very short. I'm going to go right down to a few things. How much time do I have, Avi? About 30 minutes for this?
Yes, Mr. Rama, 30 minutes would be perfect.
Okay. So folks, I'm going to start with two of my favorite questions. And the first one is, how do I describe this company? I'm going to ask the question. I'm going to answer on your behalf because of the format we are using. So can I say this is a leading automobile manufacturer? And how do I describe this one? They are a leading IT services company. And how do you describe this company? They are a leading hospitality company. Are these correct answers? All these are wrong answers. Folks, all these three names that I put over here are actually in the same business. And never to forget, the business of running a business enterprise is to make profit. You're all entrepreneurs. Had I asked you guys, what business are you in? Same answer. You are all in the business of making profit. Second question is, tell me how many of you attending this session right now are non-finance people? And the answer is, none of you are non-finance people. Chances are some hands must have started going up. Now, what do I mean by that? You probably saying you are a non-finance person and I'm saying you should not say so. The problem seems to be in the definition. How you are defining who a finance person is and how I seem to be defining. And mind you, this would have been my answer even if any of your employees was attending this. An employee in charge of sales or marketing or production or HR, my answer would have been, you are a finance person. So what do I mean by that? Folks, you must understand, first of all, the problem lies in the definition of finance management. Many of us define finance as things that happen in the finance department. But most of the things that happen over there are accounting related. That's not finance management. Finance management is happening 24/7 in every action of every individual in your organization. When a salesperson is taking a decision about the price to be charged, or is negotiating a discount, or is deciding the credit to be given to the customer, these are financial decisions. Production scheduling is a financial decision. The number of people an HR person is supposed to hire, the terms on which you're going to hire, these are all financial decisions. Your profit of the organization depends on how many of these decisions are financially intelligent decisions. And the people we call as finance people, people like me, we are not there when finance management is happening. The finance professionals come into the picture after everything is over. They do a post-mortem and tell you whether the organization has made a profit or a loss. So tell me, who are the real finance people? Is it those so-called finance professionals? Or is it the people on the floor, on the field, in the market? Now, I'll tell you why I'm telling you this, because we pay a huge price for this misinterpretation of who a finance person is. But folks, I'm going to start by quickly introducing you to a balance sheet, because whatever I say depends on your understanding of the statement. 101 on balance sheet. What is a balance sheet, folks? Pardon my speed. I'm going to be a little fast so that I can do some justice and leave you with something solid in the next 30 minutes. Guys, a balance sheet, as you know, the two sides are liabilities and assets. But frankly speaking, liabilities simply tell you where the money has come from. So it represents sources of money, and assets tell you where the money goes. Let's say Mohit Jain starts a new business. And let's say he wants to make furniture. So he starts a company called Mohit Furnitures. Now, what is the first step in business? It needs money. Where will the business get money from? The first person it will go to will be Mohit. Mohit, give me money. Mohit says, how much do you want? The company says, I want 1,000 crores. Let's say Mohit says, I'm not interested in giving you 1,000 crores, but I don't mind giving you 400 crores. This will be called Mohit's capital. Or if the amount is large, then there can be a number of them, owners. Then they are called shareholders, and the capital will be called share capital. But the requirement was 1,000 crores. So for the remaining 600, Mohit Furnitures goes to a bank or somebody and borrows. First point I'm trying to make is, please understand, when an organization needs money, how many options does it have? Just one. What is the option? Borrow. Who does an organization borrow from? It borrows from the owner, and it borrows from an outsider. Since both are in the nature of borrowings, both appear as liabilities. Make sense? But tell me, what is the difference between Mr. Mohit as a lender and the banker as a lender? The difference lies in the terms of lending. Bankers' terms are, listen, I'm not willing to take any risks. I will lend you on the condition that you guarantee me a return. Whether you make a profit or a loss, you got to guarantee me a return. Then, of course, the company must have told the banker, if you want a guaranteed return, irrespective of whether we are making a profit or a loss, then number one, keep your expectations toned down. The banker must have said, I'm happy with, let's say, that 10%. And the company must have said, banker, if you want me to give you that 10%, even when I'm making losses, I'm agreeing to that. But then on the other hand, don't forget, I might even make profit, and I may make huge amounts of profit too. Then you don't keep an eye on that. If I'm going to give you 10% when we are losing, I will give you the same 10% when we make pots of profit. Banker must have said, fair enough. Mohit, listening to this conversation between the company and the bank, tells Mohit Furnitures that, see, I am not like the bank. I am not so unreasonable. I understand there'll be ups and downs in your business. Some years you'll make profits, some years you may not make profits. Mohit says, I am willing to give you my money with no guarantees whatsoever. What does that mean? That means if you don't make profits, Mohit says, I'm okay if I get nothing. But then he says, to compensate for that risk of may not get anything, he says, when you do make profits and after you paid everybody, I will take everything. On what terms did the banker lend? Banker lent on the condition, give us a guarantee, but a limited amount of returns. Mohit lent on the condition, don't want guarantees, but then don't want limits on how much we can get either. Fair enough? This company borrows 400 from Mohit, 600 from the banker. 1,000 crores are now deployed on the right-hand side. Wonderful assets are purchased. Those assets are put into use. And now this company starts generating revenue. Imagine on deployment of 1,000 crores, this company generates a sales revenue of 3,000 crores. So far, nobody has been paid. I want you guys to visualize and tell me how many groups of claimants can you visualize standing in a line saying, we want a share of the 3,000 crores. How will the 3,000 crores be distributed? They still have to pay salaries to the employees. They have to pay vendors of raw materials. They have to pay rent to the landlord. They have to pay printer, stationer, telephone, water, all these. But these are items. I want groups. Can I say all these items comprise one group called operating expenses? One group standing in a line, operating expenses. Second group, shareholders. Third group, lenders. And the fourth group, Government of India for income tax, right? Guys, doesn't matter what you do, doesn't matter where you are located. Whatever sales revenue your company will generate will get distributed between these four groups, but not in this order. Can you now help me choose the order? The first claim, I'm sorry, I'm asking questions, I'm answering because there's no time to wait for your answers. The first claim will be of operating expenses. First of the month, correct, operating expenses. First of the month comes, salary has to be paid. Overheads have to be paid. Landlord has to be paid. Let's imagine this company's operating expenses. This company's operating expenses, let us assume, are 1,600 crores. How much did that leave you with? 1,400. What is this 1,400 called? This is not called gross profit before you say that. This is either called operating profit, or this is the stage of profit where from sales, you have recovered operating expenses, but you still haven't paid dividend to the shareholder. You still haven't paid interest to the lender. You still haven't paid income tax to the government. So this is also called PBIT, profit before interest and tax. Or it is also called earnings before interest and tax, EBIT. Now, three groups are left. Now we pay the lenders. How much has this company borrowed? 600. At what rate? 10%. So you pay 60. That leaves you with 1340. From PBIT, I has been paid, interest has been paid. So this is PBT. Now we pay the government. Let's imagine we pay the government 340. That leaves you with 1,000. Who does this 1,000 crores? What is this called, guys? This is called profit after tax, PAT. Who does this belong to? This belongs to, in our case, Mohit. Correct. So this belongs to Mohit. So guys, now in the line, Mohit is standing. And Mohit will say, Mohit Furnitures, I had told you, if you don't earn, I will take nothing. But when you do earn, and after everybody's been paid off, I will take everything. So Mohit says, please give this 1,000 crores to me. But folks, when Mohit Furnitures, we'll call it MF now, shortened. When MF wanted Mohit's money, it had gone and made all kinds of rash promises to Mohit. That yes, Mohit, all the profit will be given to you and this and that. But now that it's time to actually give it to him, this company starts having a change of heart. They start negotiating with Mohit. They say, Mohit, we said everything belongs to you, and it does belong to you, Mohit. You are the owner ultimately. But they say, Mr. Mohit, how much money did you give us? 400 crores. Had you not given it to us, had you put it in a bank, how much would you have got? Not even 5%. In fixed deposit, little over 5%. Had you invested in bonds, you would have earned 8, 9, 10%. Had you put it in risky ventures, you would have earned 15, 18, 20%. They say, Mohit, we can give you 30%. Or we can give you 40%. Maybe we can go up to 50%, but Mohit, don't take the entire 1,000 crores away. Why are they saying this? Are they trying to cheat Mohit? Answer is no. Ultimately, Mohit is the owner of the company. Then why are they not giving it to him? Guys, have you noticed? No company gives the entire profit to shareholders. My question is, why not? The shareholders' condition of joining was, but the condition put by the shareholder was, if you don't earn, I will take nothing. You understand, had this company not earned this part of the bargain, they would have honored completely. His second condition was, when you do earn, I will take everything. then why are they not giving it to him? Why should they reinvest? Why not give it to him? Mohit, why should it go to reserves? So guys, whenever I ask this question, I get numerous answers. As Ramakrishna said, they need some money for the future growth. They need some money for expansion. They need money for emergencies like pandemic. Who knew something like pandemic might happen? They still have to return the loan, etc., etc., etc. And my response always is, I will accept all your answers, but as reason number 2 for not giving it to Mohit. But there is a more important reason, number 1, why this profit is not being given to him. Pankaj, this I wish had I preceded my talk with about 3-4 hours of more input. One of the first things I would have communicated to you, and all of your entrepreneurs, you have experienced it. One of the first things an entrepreneur realizes after starting a business is that there is no connection between the profit that a business makes and the bank balance that it has. Or maybe there is a connection. I think there is an inverse relationship. Higher the profit you make, lower the bank balance you have. This may sound contradictory, but entrepreneurs will understand. I mean, the biggest mystery that confront business people is, where is the money? Accountants tell us so much turnover, so much profit. In the bank, I don't have money to pay salary. So folks, what I'm trying to tell you is, what I'm saying is, if this company makes a profit of 1,000 crores, even if they would love to give it to Mohit, but to give it to Mohit, they not only need a profit of 1,000 crores, they need a bank balance of 1,000 crores, which according to me is impossible. Now, assuming on the off chance, this company not only had a profit of 1,000, they also had a bank balance of 1,000 crores, they still would not have given it to Mohit. Now, the other arguments would have come in. They would have said, Mohit, why are we making so much profit? Because we are successful. Because we are successful, Mohit, there are so many opportunities of growth, so many opportunities of expansion. If you take all this money home, Mohit, how will this company grow? And who is Mohit? He's the owner. He understands if this is in the interest of the company, not to give it to me, and I am the owner of this company, then it is in my interest not to take it away. Mohit says, no problem. You can't give me the entire amount. How much can you give me? 50%? Give me 50%. Tell me, how much money did Mohit invest in this company? 400 crores. How much is 50% of 400 crores? 200. So give him a dividend of 200 crores. Now how much is left? 800 crores. Who does this belong to? Now, if you have said it belongs to the company, I will beg to differ. Guys, this doesn't belong to the company. It continues to belong to Mohit. Just because Mohit accepted 200 crores out of 1,000 crore profit, that doesn't mean he has waived his right over the remaining 800 crores. He simply said, MF, you can't give me 1,000 crores, doesn't matter. How much can you give me? 200? Give me 200. Use my 800 crores. So tell me, till yesterday, how much money does this company owe Mohit? 400. Today, how much money does this company owe Mohit? The original 400 they still owe. And now they owe him another 800 crores. So the profit that a company makes and does not distribute also appears as a liability under a heading called reserves. Very often non-finance people get a little surprised. Why is profit shown as a liability? Answer is because it belongs to the owner. If you haven't given it to him, then you owe it to him. As Ravi Shekhar correctly points out, now the total money this company owes Mohit is 1,200 crores. Ravi, what is this 1,200 crores called? This will be called Mohit's or the shareholders' net worth. Right? Folks, I said when I started this session, I told you balance sheet, liabilities represent sources and assets represent uses. I was trying to prove to you. Do the liabilities represent sources? Is the first item on the liability side a source, share capital? Answer is yes. Who gave it to you? The owner. Is the second item a source? Answer is yes. Who gave it to you? Again, the owner. The difference is, in the first case, the owner physically invested money. In the second case, he may not have invested money, but he left behind something he could have legitimately taken home. Is the third item a source of money? Answer is yes. Who gave it to you? Some banker, some lender. But organizations not only go to banks and borrow money, They also go to vendors, suppliers of goods and services, and they say, can you supply these goods and services? And we will pay you 1 month, 2 months, 3 months later. Those items also appear over here. Is this a source of money? The answer is yes. The banker gave you a loan in cash. Those creditors gave you a loan in kind, but it is a loan nevertheless. Guys, do you now recognize the left-hand side of this balance sheet to be merely a collection of sources? But the key question to be answered is, why is MF going around borrowing money from everybody? It is borrowing from Mohit, it is borrowing from outsiders, it is borrowing directly, it is borrowing indirectly. Do you think this is an arbitrary collection of money, or must it be as per a design? Guys, this money better have come as per a plan. But it is not funny how often it doesn't. And when the money comes in without a specific plan in mind, then this company has probably sown the seeds of sickness even before it has taken off. Imagine this money had come without a plan. Tell me what will happen? Guys, if the money has come without a plan, then now when Mohit starts investing this money on behalf of MF, he will discover one out of two things happening. He will either discover that halfway through acquisition of assets, he will run short of money because money has come without a plan, or he will discover he's able to buy all the assets that he wanted and there is money left over. What I'm trying to tell you is, if money is raised without a specific plan in mind, you will either run short of money or you will have excess money. Tell me, which is a happier state of affairs? Should an organization have less money than it needs, or should it have more money than it needs? What will happen if you have less money? Guys, if you have less money, you won't be able to buy the assets for your functioning. How will you function? If you raise less money than you need, you will get into trouble. If you raise more money than you need, I think you'll get into bigger trouble. I am now giving you a mantra of good finance management, and that mantra is, please remember, less is bad, more is worse. Now, how less is bad, everybody can readily understand. How can more be worse? Again, unfortunately, I don't have time to explain it to you today. I need to give you 2-3 hours more of input before I can explain why more is worse. But guys, take my word for it and make sure everything that you have is at an optimum level. If you have less installed capacity than you need, some orders will not get executed on time. If you have more, you'll get into bigger trouble. If you hire less manpower than you need, some functions will not get performed. If you have more, that is what I call as NPA, non-performing asset. How much blood pressure should we have in our body? Less than necessary or more? Less is bad, more is worse. This rule applies across life. Optimum, correct, Ajay. Optimum is the name of the game. And therefore, how much money an organization raises is a matter of art. And how do you know how much money you should raise? That answer will be given to you by the right-hand side of your balance sheet. And therefore, in my opinion, if you're in a position to start a new business, a new enterprise, a new project, the first exercise you must do is to prepare an imaginary balance sheet of the business or project that you intend to start. And which side of the imaginary balance sheet will you make? Right-hand side. Visualize till the last penny possible. If this business of mine has to succeed, then how much money do I need? How much for land? How much for building? How much for equipment? And mind you, no guessing. Every figure that you put should be preceded by research, invitation of quotations, etc., etc. Once your right-hand side is ready, total it up. Now Mohit finds for this business to be a success, he needs 1,000 crores. Now he looks inside. How much money does he have? The business needs 1,000 crores. Mohit has got 400 crores of his own. So the next realistic exercise you have to do is, where is the difference going to come from? Who's going to be willing to lend it to me? This is called capital structure planning. And once a blueprint is ready, this much money is required, this is the way it will come in. Now, when you start the real thing, start with the left-hand side. First, invest the money that you propose investing out of pocket. simultaneously start the process of borrowing. And once money comes in, you start investing. Now I want you guys to help me visualize right side of this balance sheet. What will Mohit do with this money? Where will he invest it? A sizable proportion Mohit will use. A sizable proportion Mohit will use for acquisition of infrastructure. He will buy land, building, plant, machinery. Those items appear in your balance sheet under a heading called fixed assets. Let Mohit invest substantial portion on the acquisition of infrastructure, but Mohit better make sure that he does not exhaust his resources in the process of creating infrastructure alone. Mohit has to make sure once infrastructure is set up, he has money left behind. Why? Because he will now require a continuous supply of something known as working capital. Now, please help me visualize components of working capital. Why does he need working capital? Imagine Mohit wanted to start the finest furniture manufacturing organization in the country. He wanted to be the best. Because he wanted to be the best, he also wanted the best quality infrastructure. So when Mohit went to buy the infrastructure, he got a little carried away and he landed up spending more money on infrastructure than he should have. What is the result? The result is today Mohit has the best infrastructure in the country to make furniture, but no money left for working capital. And let's say next day, Shailesh lands up over there and Shailesh says, Mohit, I'm starting a new IT services company. In my company, I require probably 100 crores worth of tables and chairs alone. And looking at your infrastructure, Mohit, I think you're the best person in the country to give it to me. I'm very happy to give you an order of 100 crores. Will Mohit be able to execute the order? Answer is no. Why not? There's no working capital. So why does he need working capital? Guys, you understand Mohit is a very lucky person. He started the factory yesterday and today Shailesh walks in with an order. But Mohit will have to be far luckier than that for Shailesh to say, Mohit, I've not only brought you an order of 100 crores, but I've also brought you a check of 100 crores. That's not going to happen unless Mohit happens to be an exceptional sort of a company. He'll be lucky enough to get the order. Now, Mohit has to understand in this 100 crore order, the wood component is 60 crores. Unless he has the financial resources, not only to buy infrastructure, but also to pump in 60 crores in wood, can he run his business? And as a prudent business person, he will not buy wood after the order has been received. He will probably buy and maintain an inventory of wood in anticipation of orders so that the day the customer walks in, production can start right away. So guys, the first component of working capital, you need the financial resources. First to buy land, building, plant, machinery, and then to be able to buy and maintain inventory. Second component of working capital is Shailesh's order is a reasonably large order. Mohit needs at least 3 months to execute the order. But next week is the first of the month and his employees are waiting for salary and landlord is waiting for rent and overheads have to be paid. Mohit can't tell his employees, guys, can you just wait for 3 months? The day Shailesh pays me, I'll pay you salary. No, sir. Every business person understands expenses are continuous, incomes are sporadic. And therefore, prudence demands that you hold on to sufficient amounts of cash in hand so that day-to-day expenses can continue to be met without waiting for inflow from operations. And the third component of working capital is after 3 months of hard work, Mohit goes to Shailesh, your order is ready, consignment is ready. Would you like to come, inspect, give me the go-ahead so I can send it to you? Shailesh comes there, says, great job done. Mohit, send the goods to me. And Mohit says, okay, Shailesh, what about my check? He said, no problem. Come 60 days later and collect your check. Not only did Mohit not get advance, even on delivery, he may not get paid. And he now needs further financial muscle power to be able to last another 60 days. And in the meantime, business has to continue, guys. Third component of working capital is debtors. I'm just looking at my watch. Even though I haven't even started what I wanted to say. I wanted to introduce this so that I can take you somewhere, but I seem to have overshot my time despite the speed. But I could not have given you a shorter introduction to a balance sheet than this.
Hi guys, Avi here. Thank you very much for watching this episode. It's so much fun bringing all of this to you, but honestly, it is difficult editing, post-production, getting people together. But when you watch till the very end, it feels great. So thank you very much. Now I'm going to give you something. An opportunity to connect with me and my ecosystem. I have an email called workwithaviarya@gmail.com. Now, what are the possibilities of working with me? Number one, if you are somebody who's liking this content that I'm putting out and saying, you know what, Avi, I want to get into your coaching. I want to get into your ecosystem. I want to understand how this works. I have a school called the Internet Moguls Business School, where we have 2 programs for entrepreneurs. Send me an email at workwithaviarya, subject Internet Moguls Business School, and then tell me about your business, what are the challenges that are happening. And accordingly, one of our sales consultants will call you, they'll tell you about your business, and finally they'll connect you with me. And we'll see if you're the right fit to work together. Number 2, if you want me to consult with you, just consulting one-on-one, understanding your business, giving you a 3-month, 5-month roadmap. So work with Avi Arya, subject consulting, and then give me all the details about your business. Next, if you want my agency to help you, you could be a product or a service, a coach, a trainer, whatever. You want us to help us set up your get known, get leads, get sales, and set up a proper system for you. Then same thing, work with Avi Arya. And in the subject, you will write agency help. And in the end, tell me exactly what you want me to do for you and what are the challenges that you're facing. And if you want to work with me in my team as a freelancer, as part-time, full-time, get into the team, work remotely from anywhere in the world, again, work with Avi Arya and say, I want to join your team, and then tell me about yourself. Ideally, for all these things, when you put in a subject, follow it with a nice micro video so I know more about you. Because I check every email myself and I'd love to get back to you and connect you with the right people in the right company. So eventually when we talk, we have all these things figured out. Finally, if you want to interview me for your podcast or your YouTube channel, email me at podcastwithaviarya@gmail.com. So there you go. Two ways to connect with us. Work with Avi Arya, and you've got the multiple options, and you've got podcast with Avi Arya, and we can podcast together. So thank you very much for watching the videos. Don't forget to watch all these videos. Send me an email. Would love to hear from you. Thank you very much, ladies and gentlemen. My name is Avi Arya, signing off for now. Look forward to seeing you in the next video. There's a link over here which has got all my emails for you to get in touch with me as well. Click on the link and get in there. See you. Look forward to hearing that email from you. Bye for now.